of which I will be hosting myself. And we're moving on from the core is dead. Long live the core! But it appears to be going virtual onto the cloud. Not there yet, it's a journey. There was one survey I came across recently which said that only 28% of banks had achieved transition of more than 30% of their applications to the cloud. So it's happening, but it's going to take some time. And the survey also went on to say that more than 2/3 of banks, this is globally, by the way, want at least 30% of their applications and data to be on the cloud over the next 3 years. Well, that means 70% won't be in 3 years' time. So not only is it a journey, it's a journey that's going to take some time. But what we're going to talk about now is a little bit about leveraging the cloud, and we'll touch on some of the points that have already been raised, but I'd like to invite up on stage to join me, please, Sanjay Sharma, the Chief Operating Officer of Newday. Conrad Ford, Chief Product and Strategy Officer of Allica Bank. And Shiv Aggarwal, Chief Executive Officer of NextGen, and importantly for our discussion here, Regional Director of the Govt Blockchain Association. Right, I'm plugged in. Am I on mic? I am now, aren't I? Dial it down a bit. Okay, title of the session, Leveraging Cloud, Driving Scale and Efficiencies. So, gentlemen, welcome. Thank you all for your time. Thank you for making it today of all days, which is great. Otherwise, I'd be feeling very lonely just at the moment. We have two financial institutions here. So, Shiv, I'm going to let you have a little rest for a moment because I want to put the first question to Sanjay and to Conrad. What are the benefits of putting the core, or what passes for the core system, on the cloud? Just give me the top line of your experience.
Well, I mean, firstly, putting your core onto the cloud isn't going to achieve much.
Well, that's the end of this session. Thank you very much, ladies and gentlemen.
Back when I worked in big banks, the fashion was to offshore huge teams of people to lower cost locations. The reality is nobody ever seems to ask the question as to whether people should exist in the first place. And I think to some extent, if you're going to move your core to the cloud, you have to ask the same question, which is basically, what are you trying to achieve? Perhaps moving to the cloud. Very interesting statistic you said earlier, just how little appetite there is to move to the cloud. And I would hope that's driven by the fact that institutions realise it's only really worth making the change if you're also changing what the core is, and you're actually trying to get your strategic benefits rather than just cost benefits.
Well, as I said, the core is dead, long live the core, whatever that turns out to be. Your experience?
Very similar views. Understanding why you want to move the core is quite important. If it's purely for cost reason, and cloud does have enormous cost efficiencies and benefits, I think you're missing the point. I consider our case, for example, we are a cloud-native company. I consider our case, when we started the discussion 5 years back, at that time the cloud, there was a lot of nervousness about cloud, etc. We looked hard at it, at what is the thing which really matters for the customers, where we want to ensure that there's a great customer experience we can deliver, which is what is going to be value for the company. And it shows with, if you know the darkness space there, architecture, it's the systems of innovation, which means the channels, which is what customer interacts with. Let's first get that and tackle that, worry about the core afterwards. Core is probably the most difficult part, and not understanding why you want to do it. If you just jump into it, I think that probably is the wrong strategy.
So it seems like a good idea at the time is not the strategy to follow.
Well, certainly just because it's the fashion.
Just
it's not the reason to do it. There's lots of good reasons, but not that.
let's get into some of the nitty-gritty of one of the big reasons people do look at the cloud and look at it seriously, and this is the issue of scale. Because you can, in relative terms, build a financial institution quite cheaply now, because you don't need to build a big one, because the cloud will let it get bigger when you need it to. Is that right?
So I think the key fundamental question here is about, yes, obviously it's about scaling, it's about efficiency, but I think that the key fundamental question here is like, why should we move to cloud? And actually, what should we move to the cloud, right? Because I think in the previous panel, we discussed, right, that there's no definition of code, right? So unless we basically define that, what do we want to move to the cloud, right? We would not be able to address the question about the efficiency or the scaling or descaling, right? Because unless we understand that what, as my fellow this thing mentioned, that it's about identifying what we're trying to achieve, and we need to basically break down the system and see basically what needs to be, not everything. We cannot make a blanket statement that we move everything to the cloud and we would be able to drive efficiency. First of all, we need to address the question with respect to why do we want to move to the cloud. So we want to basically drive efficiency, we want to reduce cost, we want to basically increase efficiency, we want to basically provide better customer experiences, right? But yes, we understand that. But the second thing is also is that how do we achieve that, right? What components or what microservices need to be moved to the cloud and what stays basically on premise, right? And once we have sort of bifurcated and we have sort of done that architecture, then we can talk about the other aspects of cloud with respect to the scaling, right? So yes, when we talk about cloud, the best that we achieve is that we can scale on the fly. But I think there are more important questions to address before we can talk about scaling.
Okay, that's me told. One of the questions from Conrad, again, looking at the financial practitioners on the panel, Conrad, Sanjay, what are the questions you address before you look at the cloud, or before you looked at the cloud, before you moved parts of the service onto it?
Yeah, I mean, firstly, so Allica Bank is a new bank, so I think anybody that's starting fresh is clearly going to start in the cloud, right? I think the discussion of whether cloud is better, I think that's over now, and has been for 5 years or so. So Allica was a new bank, therefore we built everything in the cloud. The real questions actually come out, basically, is what exactly does that mean in terms of your technological architecture? In other words, of course, one variant of the cloud these days is banking as a service. So one variant is basically let someone do it for you, and the other variant is build your own proprietary technology in a cloud environment, like in our case, Azure. So how did we unpick that problem? I think that's the key question. So we thought long and hard about this, and we concluded that there were really three things that we really wanted to build ourselves, or let's call it control ourselves, and the only way you control something is building it yourselves. One of those was the customer engagement layer, so the thing by which we interact with customers. Now there are many technology providers out there that offer kind of low-code, highly configurable front-end capabilities. The reality is we didn't want to be in a situation where that really critical front-end engagement layer with the customer, where you can A/B test, for example, where you can build innovative new channels, WhatsApp, for example. We wanted to have complete control of that. So customer engagement. The second one would be sort of the orchestration or business logic, because that's where you build your sort of proprietary capabilities, but that's where you differentiate against everybody on standard platforms. And then finally, and most importantly, is our data. We wanted real complete control of our customer data, right, and other data sources. In terms of what we were actually happy to buy off the shelf from a cloud banking provider, it actually turned out, largely speaking, to be the product ledgers. And I say ledgers plural because we chose one ledger for our payment services and one ledger for lending. And it kind of came up in the earlier thing, a very good point was made, there isn't kind of a universal solution, these are very different technical problems. So we chose to buy off the shelf banking as a service. We chose to go down the route of off-the-shelf providers for our product ledgers, and we kind of looked at the ones that were highly configurable and API first. So on the list, if we wanted to control the business logic and the customer engagement, and above all else the data, then we wanted an API-led configurable one. The reason we were happy to give that to somebody else, give that work to somebody else, and it's in the public domain. For our lending, we recently put some some customers onto Mambu, which is a very API-driven configurable ledger. Because effectively that's a commodity, right? Why would we go through all the pain of building a product ledger that spits up statements and interest calculations? Somebody else has done that, and we'd rather just buy that commodity. So the question is not should you be on the cloud. Eventually, we're all going to be on the cloud. The question is basically, is it your proprietary technology? Is it your data or is it a third party? And I think the answer is somewhere in between for us.
And Sanjay, your experience?
Quite similar. It goes back to why is it one needs to do that. So what's the strategy? What are the drivers behind it? And you can, the banking world and the technology behind banking world is very complex. And everyone knows this. But it's how do you decompose it and say what really matters, first to the customers and to the business, which is what, then you unpick that and then you sort of say this is where we're going to focus on. Now, cloud has got enormous benefits. You don't have to worry about scalability. There have been examples here in the UK and elsewhere in the world where the banks have had many challenges because it could not scale. The channels did not scale because of on-premise infrastructure, etc. Cloud, if rightly configured, takes away all those hassles. Enormous scalability. It's lower cost if it's configured well, and there are different models on the clouds whether you go with what's called infrastructure as a service or platform as a service, and etc. depending on what model you choose. But you can actually take down the cost quite significantly. And today we run a business with a 30%, less than 30% cost to income ratio. And large part of our efficiency is driven at the back of the transformation which we've been able to achieve. And we run a business where, again, with a very high customer experience, with outstandingly high NPS and NES, etc. Again, at the back of the transformation which we've been able to achieve. That cloud transformation, if done well, delivers all that. It's highly secure. So you don't have to worry about all the hassles about the different tools and the capabilities and etc. And if you go for cloud native solutions, it actually just removes all those hassles. There are capabilities, for example, in Microsoft Azure, whether it's Sentinel and etc. Those kind of capabilities, it's very difficult for any organization to replicate and build those on-premise. And then the last point I would focus is on the resiliency, and this is where we see several issues which banks have had in the past is. And what I mean by resilience is, can you guarantee very high availability to your customers day in and out? And with what the cloud service providers they've built and the way they have built, whether it's a zone configurations or the multiple regions and etc. and all those things, one can achieve near 100% availability. And that is quite, again, I go back, it's important to the customers. Why we do it? Let's go back to the first question, why we're trying to do this. It's important to the customers, it's important to business.
Can I add to that? So I think, while I'm not from the banking industry, but actually if you think about this, I'm an expert at this because I have more than 20 years experience of being a banking customer. And if you think, and if you think about this, I'm the most important stakeholder of the banking industry, right? And I think that is where the key focus should be, right? How do you basically improve the customer experience? How can you provide them better services? And how can you basically help them manage their money better, right? And with that thought process, I think cloud makes sense. But again, I think it's about how do you leverage? It's just a tool, right? So we need to understand what are the capabilities of the tool and how best we use the tool, right? And I think two things, right? I think in the last panel we discussed about risk and we discussed about ecosystem. I think the risk is about, I think as we mentioned, right, it's about resilience. How do we make sure that the systems are up all the time so that we can provide seamless banking experience to all the customers? And secondly, it's also about the ecosystem, right? I think one of the concepts which did not properly fly was open banking, because open banking is about basically providing better services to customers in a more seamless and borderless fashion. And I think cloud is one technology which can actually enable that. It's just that we haven't done it properly.
Right. Well, the open banking, as you may be aware from looking at the agenda, is a topic we'll be touching on in the session in the afternoon. What I'm hearing is we're not talking about migrating the core to the cloud because there'll be no core. I'll probably get in trouble from my boss saying that. Maybe we shouldn't have called it NextGen core banking, we should have just called it NextGen banking. Is that really what I'm hearing from all three of you? Point one, and point two, I take Shiv's argument about being the expert, he's the customer. Is this a fundamental shift in the way that banking institutions are thinking now? Do you think more about your customer than about your systems? Have you always thought more about your customer than about your systems? Do you see other institutions switching to that mentality?
Yeah, so I think one of the great challenges for the incumbent financial institutions is that they are, the classic phrase, universal banks, largely speaking. And it's very hard to be customer focused when every type of customer is your customer, right? Now, I know in theory that you could have a business unit owner or a product owner for each of your different customer segments, and they can be laser focused on them. The reality is when the rubber hits the road, at the end of the year, when they've done the budgeting process in terms of your investment during the year, and somehow 50% have to come off that budget, in the end, you're going to have to decide where you're going to actually focus your investment. So the universal banks find it a lot harder to be customer focused, and I think that's just a structural issue. It's not because they're incompetent, it's a structural issue. So let me just give a real example. So Allica Bank is focused on a very specific customer segment. So it's the M in SME, or if you're in America, the M in SMB. It's medium-sized businesses. Now, medium-sized businesses are chronically underserved by major banks, not just in the UK, and actually most Western economies. And the reason is because the major banks are focused on two polar opposite segments: very large corporates, which are very low volume and very high value, so they just throw people at them. And there's nothing wrong with that. And then consumer, which is very homogenous, very high volume and very simple, where everything is digitalized, despite what we would hear at conferences. Medium-sized businesses are very awkward for the big banks because they're quite complicated but relatively low value. Therefore, you try and serve those customers on a consumer banking platform, everything breaks down and you end up having very high admin costs. So as a result, our segment gets underserved. Now, any one of the big banks, if they wanted to, could really put a lot of effort into actually solving that problem. The problem is at the end of the year, that's the bit of the strategic investment budget that always gets cut. So we're very, very focused. So for us, it's around building an entire end-to-end operating model designed for that segment. Not just around what's important to the customer itself, but also around how you actually take out cost. So for example, in the case of a medium-sized business, when they try and change their address with their bank, things go horribly wrong because the bank wasn't configured for registered versus trading addresses, and they have UBOs and subsidiaries, and everything breaks down because the consumer banking platform can't deal with it. So for us, it's around building a dedicated operating model, including technology around that use case. And that's one of the reasons why we decided to build the business logic and customer engagement layer ourselves, because nobody in the core banking world has done it well enough. My answer to the question of what is core banking, it is product ledgers. Yeah, you will find core banking providers do all kinds of different things. They have customer front ends, white label front ends, but in the end, core banking for me is a product ledger. That's the bit that's you can't operate a bank without the debits and the credits, the core ledger. That is core banking. Everything else is calling itself core banking.
Right, well, you're the M in SME or SMB. Would it be fair to me to describe Newday as a white label credit provider?
Own issued as well as white label. So across the board, we've got 4.5 million customers, so it's across the board. You touched on 2 points. One was core, and the second was customer experience, and let me tackle both. The previous panel had argued that there isn't anything called core banking, and I completely agree with that, because there is no clear definition. What is core banking? Where does it start and where does it stop? It is, and that brings me to the point about the customer experience. You have to look at the customer. What does the customer want, and how do we deliver the service in the best possible way we can? And what's really required, what the technology needs to sit behind it to deliver the service. Now, customer experience, again, is a very used term. What does the customer experience really mean? What you need may be something very different to what Conrad means, and etc. Having a very generic set of terms, having a very generic set of product, and today, if you look at it, whether it's a mobile app, one generic mobile app, etc., and everything, and just offering that is not what a customer wants. What a customer wants is more specific to me as an individual. What are my needs? Does the bank or does the financial institution really understand me as a customer? And that requires then having the data, understanding who this customer is, and of course, breaking it down into the products they have, the services they have, how they interact, the channels they like, they don't like, and all those kind of things. And then, even when it comes down to the mobile apps, is can you tailor the mobile apps to the customers by the segments? Because if I'm a customer in collections, there's no point in showing me how much money I have, on my account balance and etc. because I can't spend. So what I really want is that how can you help me? I'm in financial difficulty. How are you going to help me in that situation? So does your app, do your channels, do they really help you in that situation? And are they really designed to cater to the individual customers? And that's what we have tried to do, but I think that is where going forward, that's where you'll see banking will evolve to. It'll evolve to where you understand customer as an individual and you design your product and services around that and you can deliver that seamlessly, day in and day out, continue to innovate. And that's how you delight the customer.
Well, as a financial institution, in response to a situation such as the one you described, I could look at a whole list of APIs and say, put that one together, that one together, that one together, that one together, and I've created a service to manage collections management, for example. And then I can put that one together, and that one together, and that one together, and that one together, and I've got credit applications now. But the key thing that you, as far as I'm concerned, that you both mentioned is data. The cloud liberates us to manage data more effectively.
Absolutely, absolutely. See, the thing is, like, I think the purpose of cloud is to basically provide processing capability, and it's also about data storage, right? And both these components are actually needed for any system in the world, obviously banking as well. So I think it's about basically how do you architect a solution to benefit from those two components which are scalable, right? And I think that is the key discussion here. That if we can identify, I think what role cloud can play, rather than just picking a blanket statement like yes, core banking can sit on cloud, I think it would not work. So I think yes. So data can actually be in the cloud, and I think it's not just banking industry, right? There are a lot of other industries which are basically putting even more sensitive data on the cloud, right? So it's not about security. It's I think the cloud industry has already solved the challenges with respect to security, with respect to efficiency. I think as banking industry, it's more about how do we bifurcate, how do we basically sort of dissect everything and understand what can go in cloud and what cannot.
Well, the advantage of the cloud, as opposed to an on-premise system, as far as data management is concerned, is that it's all there. One of the problems financial institutions have had, particularly in recent years, as it's become more apparent, is they don't know what they know. The information required by that collections customer will be in the bank somewhere, but the right department might not have it. If you've got the system on the cloud, that information can be shared much more simply.
Can I add something to that? Actually, so I think the way current solutions are architected, I think we are creating data silos. I think and I think if you look at the world, how we are moving forward, I think we are talking about APIs, we are talking about open data, we are talking about open banking, and I think for us to basically enable those things, cloud would play a very strong role, right? Because obviously, I think if you want different banks, different institutes, different regulatory bodies to sort of collaborate and build that ecosystem, I think for that, I think open is the keyword here. I think that is what we need to focus on. How do we open up things, right? How do we open the systems? How do we open up the data so that we can basically interact more efficiently between the providers, between the banks, and between the regulators?
Okay, I want to talk about cryptocurrencies now. Yeah, look at that. No, actually, I don't, and that's a key point I want to underline. I'm not talking about cryptocurrencies. I want to talk about the role of blockchain. Blockchain is not Bitcoin, although Bitcoin is a blockchain. We're not talking about Bitcoin, we're not talking about cryptocurrencies, but the role of blockchain and what that can deliver in cloud financial services. Shiv, go.
At least, finally, my question. So I think when we were having this discussion, right, we sort of discussed about some of the key components of a core banking solution, right? There are two things. One is the ledger, And then the second thing is basically obviously the contract, right? With respect to basically it could be the contract with the customers, it could be contracts with the partners, vendors, and XYZ. Now, when we look at blockchain, right? So blockchain, first of all, it's a distributed ledger, right? And that sort of basically enables different ecosystem partners. So it's about how do you basically remove the trust from the equation? Because right now, when multiple parties they have to interact with each other through a ledger or through a database, I think one of the challenges is with respect to how do you establish trust? How do you ensure that data is not being tampered with? I think that is what basically blockchain solves. So blockchain basically removes the need of trust when you're talking about multi-party systems. Secondly, it's also immutable, right? So I think a lot of people basically take immutability in the wrong way. It's like basically immutability is about that anything that changes on the blockchain, anything that changes on the data, that is basically easily identifiable. So basically the auditability is there, the traceability is there. Now coming to the contractual aspects, right? So right now what happens is like a lot of contracts are being basically paper-based, right? Or they are in the system and then still basically sometimes they don't work. And this is where the second aspect of blockchain is the smart contract. How do you basically use blockchain as underlying capability to sort of digitize all the contractual aspects of the banking industry? Is this something smart contracts as technology can do? So these are the main two components of blockchain which can basically be brought to the table for sort of innovating banking industry, for driving efficiencies, and also basically I think one of the key challenges I think in the last panel was about debt risk. Actually, I think that banking should not be about risk, right? I think the one job banking industry has to basically help me manage my money, right? And if we are basically adding risk to that, then actually then it puts that question in my mind that why I should put my money into the bank when it's actually adding risk. And this is where I think by leveraging technologies like blockchain, smart contracts, and also decentralized identity, I wanted to throw that in, is that you sort of remove the risk from the equation, right? Because I think another point from the last panel was about how do I basically create a system where I am basically able to remove fraud? How can I onboard my customers on my platform without having that fraud or having that risk, right? So I think these are the technologies that can actually help us achieve that.
I'll just make one addition. I mean, there was a fascinating thing that happened at the start of COVID in this country, which is that the major banks in the UK, which had been talking about digitalising SME lending for a decade, and had tons of people basically doing nothing in WeWork, at huge expense in these innovation hubs, etc., doing proof of concepts. COVID hits, and then suddenly the government needed an enormous number of loans to be distributed to SMEs. And you couldn't do it the traditional way, which is dragging the poor SME into a branch. And guess what? Within 2 weeks, they managed to digitalise this process. They brought in e-signatures, they brought in purely online journeys. The real question is basically, if you can do it, why on earth haven't you already done it, right? So you kind of...
Do you actually have an answer to that before you go?
what I'm trying to say is that we kind of look for these breakthrough technologies like blockchain, and I understand that blockchain can transform things, but the reality is, in the end, most transformation that the big banks need to do is actually just basic execution, right? E-signature is a mature technology, it's been around a decade, why on earth have you not already got it, right? It's poor execution, honestly it's poor people, yeah? It's tons and tons of middle managers with none jobs, not getting stuff done. This is the problem. And look, like I said at the start, right, the question is not should you move your processes and your infrastructure to the cloud. The question is basically, should you have those processes and infrastructure in the first place? That's the real question that the big finance.
Would you want to ask a harder question or a harsher question?
Well, it just needs to be said, right? And look, if I was CEO of one of the big 4 banks in the UK and I was walking into my huge tower offices in Canary Wharf, I would honestly be thinking half these people don't have a real role. The problem, of course, is you don't know which half. Without doubt, you could get rid of half of the people in those head offices. Without doubt, the question is who, right? Many of the smartest people in big banks are writing PowerPoint slides instead of work, right? It's just crazy. You and I used to do that together. we were really good at PowerPoint, and we got real jobs. So, in the end, right, it's actually around execution. If you can do things when you need to, why can't you do things? Why can't you do things without a burning bridge? because it's not actually that hard to visualize. They just start making small steps and get on with it.
I feel that deserves a round of applause. And after that uplifting sermon, Sanjay.
I can't match that. So I'm very much with Conrad. I think there is a lot of basics to get right, rather than banks to, yes, and there are use cases and there are places for blockchain and etc. and probably in the capital markets, and there are very smart people in those spaces, and they can worry about it. But the consumer banking side of it, the corporate banking side of it, there are lots of basics to get right, and it is important that the banks and institutions, they stay focused on getting those right before going out and experimenting with things like blockchains and etc. To be fair, not many people understand it. They can talk about it, but not many people really know, and the talent is not there. So they can get a lot more value by staying focused on the core business and the customers.
Hang on. Core business, not
And the
necessarily the core bank.
No, core business and the customers. But, yeah.
Yeah. No, I think, yes, obviously I think everyone has to focus on the core problem statements, right? I think getting the job done in the right way at the first time, right? But actually, I think it's also about leveraging the right tools. So all those tools, so technologies are tools, right? They're nothing more than tools. I think unless we use them in the right way, they would not work for us. And I think I don't necessarily agree with the statement that you made with respect to blockchain is not necessarily this is not the right time for blockchain or core banking. I don't agree with that statement, because I think 10 years back everybody was saying that blockchain doesn't have any use, right? It's just basically for I think minting money from thin air, right? But if you think about this, in 10 years, I think every bank, for that matter, on this planet is now basically doing something with the blockchain. If not in public, in private, under basically undercovers, they are basically using blockchain for certain things. Because blockchain industry has proven it that it has a merit, because it can help us with this intermediation, it can basically help us with efficiencies, it can help us with basically a lot of compliance and so on and so forth, right? So there's a place of, but obviously at the end of the day it's a tool, right? Unless we identify the problem statements that we can solve this with this tool, I think we are not doing our job right. So yes, we have to do our job right first, but then blockchain can help us basically do it in a better way.
No, come back on that.
just a few points. I see enormous potential in blockchain in financial services, so I'm not going to disagree with that. I just think if I was running a big bank, that would be the least of my worries. Right? I'd just be wondering why on earth are we not able to execute? One of perhaps my favourite quote in fintech is from Amlôt, the founder of Starling Bank, which for those that don't know is a great digital neobank in the UK. She said, "We are not in an innovation battle with the big banks. We are in a cost-income ratio battle with the big banks." So what she was basically saying there is, every time they build a cool feature, they build lots of cool features, the big banks, in the end, replicate that feature. And actually the cycle time for them replicating it is getting shorter and shorter. I remember the first time I saw Monzo at another digital bank, I was blown away. Now I've got all that stuff in my Barclays app, right?
Not in your Allica app.
Business current account, not a consumer current account. But I do have an Allica, and it has those features. So what she meant is that you can build a feature, you're going to get copied, right? And the core banking provider will make it easier and easier to copy that stuff. What she actually meant is it's that ability just to relentlessly digitalize and automate is what the big banks are failing to do. And in the end, the big banks are the favourite analogy about big banks is that they're lumbering dinosaurs that are going to go extinct. I'm going to give a different dinosaur analogy. So a few years ago, they discovered the biggest dinosaurs that ever lived in Argentina. These enormous things that were like brontosauruses. And they believed for quite a while that these things, once they got to adult size, would be invulnerable. No dinosaur could touch them because they were so big. They now begin to think that the predator dinosaurs will actually just follow around the pack and just rip off slices of flesh from these dinosaurs. So they didn't kill the dinosaurs, they basically just took the flesh. They used them as portable pack lunches. And the reason I use that analogy is the big universal banks, they're not going to go extinct, But the fintechs, the challengers, we're going to come and take all the nice chunks. All the bits where you're making a nice return on equity, you're going to go take those bits, yeah? And you're going to become lumbering dinosaurs that don't go extinct, but have a terrible ROE. That's the real challenge facing big banks.
And on that note, we will draw to a close. I'm conscious we sit between you and your food, ladies and gentlemen, so we won't keep you much longer. Are there any questions for the panel? Or have we browbeaten you into submission? Or are you too busy thinking about lunch?
I've got
Oh.
5 minutes more. Very quick.
Keep you waiting for lunch for 5 more minutes. But question to Sanjay, I think you spoke about proposition for an individual. Right? Is it truly possible for banks or financial institutions to personalize and create a segment for one? Because everyone speaks about it, but at the end of the day, on the other side of the fence, we don't really see that kind of personalization and offerings from banks or financial institutes, where you are being offered very personalized, very tailored products and solutions and services.
Yeah, good question, and I touched on it very briefly when I spoke about it. So technically, it is very much possible. It depends on a few things. One, data, because banks, if you look at it, their data is spread across multiple systems and multiple functions and etc. They don't have the customer data in a single place. And that is quite a complex thing to sort of achieve. But once you can achieve that, and you have got all your customer data in one place, and that comes back to the cloud, because if you have a cloud environment that enables that sort of those things, then the analytics or AI which you can put on top of that is quite phenomenal. Now, we're not there yet, but I'll give you some examples from our company, and we are on a journey. So, for example, our mobile app, yes, on the face of it, it's a one mobile app, but we personalize it to the customers. Now, not by individual customers, by customer segments, and we are talking about 50 plus customer segments. So what you see typically in your mobile app is not necessarily what I'll see for the same product. So if our customer is in collections, customer in collections would not see the account summary screens and etc. What customer in collections would see is how can we, as a company, how can we help the customers to come out of the financial difficulty. So what help do they need and what tools we can provide, etc. If you're a transactor, a high-value transactor, what are the other products and services we could sort of offer you which would be of interest to you that you may see if I'm a revolver, it may be something different. And you can achieve that because we have achieved it. So you can achieve that, but it requires data in one place, and it requires that very strong analytical capability which you can actually run on top of that. And there you can then build the customer segments. Now, will it get to a single customer, every customer as being this thing, which is not necessary because, but you can create those customer segments, and those defined customer segments which are unique, you can actually tailor the propositions according to as per those segments. And that is very much possible because we are doing it.
May I add a quick point
Yes.
to that? Actually, so I think it's a very good point, right? Because for personalization, you need data, and I think one of the new ways of looking at that is that basically it's about basically creating a user-centric identity, and actually this is happening now, right? So European Union has already told the member countries that they should basically look into citizen wallets, where basically the citizens would be able to basically manage their data in their wallet, and then service providers would be able to basically tailor services based on the data that the consumers share, right? And this is what basically the future is, right? I think this is where the world is now basically, I think, would organize the service providers and the product providers. They would basically organize themselves around the consumers and the users, and then basically we would basically define that what experience do we want to achieve.
Yeah, just one further thing from me. So we actually have to solve that problem, not for the reasons that tend to get talked about in conferences, but because we have to. So for example, when we're funding a commercial mortgage, so this is a mortgage on a hotel or a factory or a shop, almost as certain as night as day, something will go wrong with that transaction at some point, and every single transaction goes wrong in its own way. So we we don't build hyper-personalization for targeting or segmentation or anything like that. The technical challenge for us is actually building an operating model for a business in which almost every customer is an edge case in their own different way. So for us, personalization is actually around elegantly and efficiently dealing with kind of edge cases of the valuation coming back or an asbestos survey, whatever it may be, there's something going wrong and how you actually deal with it elegantly. And for us, it's not around something that we want to do for competitive advantage, it's actually something we have to do to make the business work. So we have to figure that one out. So I think there are analogous things, it's kind of like micro personalization. There's many analogous things and opportunities in banking.
Any other questions?
I had a quick one. We spoke about execution, we spoke about, and that would make me think about, well, automation and actually business process automation. So how, because we got vendors with marketplaces, obviously banks of different sizes have multiple providers, and all that needs to be mixed with people operations, so workflows. And so how could you explore, tell us a bit more about, would a vendor proposing, some kind of workflow automation tool, which does not deal only with its own kind of platform and its kind of third parties connected to it, but also all the processes, all the providers. How do you deal with workflows or APA? How do you, enhance execution?
I'll think about that. Because one of my pet hates in traditional finance institutions is this really binary view of there's change and there's BAU, or there's run the bank and there's change the bank. Yeah. If you spend time at any of the high-growth scale-up fintechs, the really successful ones, the ones with thousands of people, they do not see the world in those binary terms. They inhabit a middle ground where every 2 weeks, or whatever their sprint cycle is, every 2 weeks things get slightly better. And the only way to own that middle ground is to get very good at the kind of capabilities that you're talking about. So in a big finance institution, or certainly some of them, you'll have a broken process that will allegedly get magically transformed by the bank transformation program that's delivering over the next 3 years. And everyone just kind of makes do and mucks with the crap systems they have and the spreadsheets, etc. In a successful scale-up fintech, almost all of them, they will be very good at sort of low-code tools, things like Zapier, Power Automate. Zapier plus Google Sheets is a surprisingly capable piece of kit until you get to a certain scale in terms of customer numbers. So for sort of early-stage processes, it's very, very effective. So for me, the answer basically it lies in that ability to always make the business slightly better every 2 weeks. So we're organised on what's often called the Spotify model of cross-functional product squads. And my product owners, the one kind of unthinkable thing is if I'm sitting in them and having my one-to-ones, and they haven't actually moved the business forward, their business forward in the last 2 weeks. And moving it forward isn't a PowerPoint presentation, it has to be an actual tangible step forward. When you have that kind of discipline of continual incremental gains, it's extraordinarily powerful. You kind of go like this in terms of your productivity. And it's the over-reliance on big transformation programs. And by the way, some of the big finance institutes are getting much better at this. I don't want to tar them, but some of them have not figured it out. I do know some of them are actually quite good at that kind of like constant incremental change, and they have small change teams. That's the answer, is using those tools as the intermediate between enterprise and a spreadsheet.
Anybody else? In which case, ladies and gentlemen, thank you very much for your attention. Please show your appreciation.